Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading today. Market is pretty much flat on the S&P. It looks like Nasdaq is also flat. Semiconductor and the small caps did get hit there, about 2% and 3% down day there. Dow is green today. Banks is down about 1%. Same with the energy sector there. Transport's down about 0.5%. Emerging market and the biotech, they're down about 1% or so. Grayscale Bitcoin caught a bid there, positive 6.5% today. Gold and silver continues to see weakness there. Some of these guys are up today except the treasury bond. Let's stick with the S&P 500 ETF Spider 65-minute chart here. So it looks like the market, this was where market closed on Friday. We saw that big ramp towards the end of the hour on Friday before close. We gapped down and then gap was filled quickly and then it came back down. And that was important. That was important that the gap was filled. And that's what the buyers wanted to do right away. Remember, when the gap remains open, it's gonna be trouble for the opposing party, right? So this is down gap. And so if the bears wanted to, provide some downside pressure, they wanted to make sure that that gap remains open and go after this gap. But the fact that this morning there was a gap down and then buyers fill that gap right away, despite the fact that we did see that first hour in red came all the way coming back down to 392, and last week or the weekend video I given you these two levels, 392 and 393, as a possible support should the price decline, because you can see that's a prior resistance potentially acting as new support there. So first hour, great work by the buyers filling that gap right away, and then we continue lower. But once that gap was filled, made a way for the boys to make a move to the upside on the second hour, third hour, fourth hour. But we start to stall where? The gap area here. So there's a little bit of weight in that. There's a little bit of resume in that, just because last time, there was that selling pressure that came about when this gap was never filled. So, where the buyers are delicately treating this area. So there's a couple things that buyers can do. The best case scenario, obviously, if you've been following me long enough, you probably already know what I'm going to say. What is the best case scenario here for the bulls, for the buyers? Gapping it up. That's right, gapping it up, because once you gap up, the good thing about gap up is always you don't have to deal with, there's an all-time high resistance there, and then there's that gap area resistance. So when the buyers or bears don't want to deal with that resistance and want to have kind of the smooth transition to the new all-time highs level, gapping up will be the best case scenario. I like to call it jumping over the fence, because these resistance could give them a little bit of volatility in that vicinity, trying to go over this gap area, which has been opened up since March 17. So pretty much almost half month or so, and then there's all-time high resistance. So gapping up above, let's say, 398 would be the best case scenario. And that's pretty much doable, because right now we're trading at 395 or so. That will be only about 0.5, 0.6% gap up. It's not a huge gap up, definitely doable there. And that will be the best case scenario. But if the buyers are gonna get up here and then decide they're just gonna get up and grind higher to fill it, well, there will be resistance in that vicinity, and we may struggle to move over it unless some sort of a big flush move like this one to the upside, right? We start falling down, that could be, buyers want to fill this gap as quickly as possible. They don't want this gap to linger around and open too long. So buyers want to come up and fill this gap as quickly as possible. Let's say the buyers fail to fill this gap. We come back to slide down tomorrow. there's good chance that bears are looking to retest that short-term moving average. The short-term moving average has been acting as resistance here and here and here. It flipped back, shifted to buyer's side, and started acting as support. So that's probably maybe what the bears want to do, kind of retest that, and then we'll have to re-examine the situation at that time. But right now, this is that gap that needs to be filled or gap it over. But overall, we want to give benefit of the doubt to the buyers in the short term because we do have higher lows and higher highs here. So let's check out that oscillator and see if we can get any more information out of today's price action analysis. So looking at the oscillator, let's zoom in that oscillator here. So we're not really getting much out of this oscillator right now. It's just been moving sideways. So it's kind of a neutral. If market continues to move higher, there's a room to move. It's not completely extremely overbought yet. Oscillator is capable of opening up and making that move to the upside. Or if we continue lower to the downside tomorrow, this will curl back down. And a good example of that is if I zoom out a little bit here, right? If I zoom out here, you can see on that oscillator, there are times where when you start to see that move, it favors the buyers, right? So, because we're near that overbought level, we did make pretty nice move here in the last several days in this market on the S&P. So what the bears want to see is that thing getting resetted, coming back down. But when you see the oscillator start moving sideways, it could be days, maybe even an entire week, just moving sideways while the price keep marching higher. So that might be what the buyers are cooking up right now. I'll come back for you. Enjoy your evening and good luck trading tomorrow.